Hi, this is Randy Finney with the right side of the chart, and this is an early trading session update for Tuesday, May 21st, 2019. I wanted to see how the markets open trading today. In last night's video, I was leaning towards a drift, drift up from where we closed yesterday in the futures overnight, which is what we had, and I'm still looking for as much as a backfill. I don't expect anything more than that. Anything is possible, so we have to certainly stay on our toes, but could get a little more upside. I'm talking about a backfill of yesterday's gap right there. That's the previous candle from Friday. We gapped down, and that would be certainly resistance right there, about 183 or so, call it. So that's the way I'm leaning today, and let me show you some levels, but I'm not 100% sold that we'll go up that far. So we have to, again, stay on our toes. Anything can happen, but as of now, I think that's the most likely scenario here. Let's look at SPY real quick. SPY, you don't have such a pronounced gap as we did on QQQ. But again, you can see, we came in, had a near down back test. It looks like none of these candles exactly back tested, at least not on the daily chart. A little bit shows a little better on the 60-minute chart, and we're moving up. But again, remember, the big picture is this: we're smack between two pretty important support and resistance levels, and so it gets tough from right here. So let's just zoom down to let's look at the futures. I want to show you a couple of levels there. And I guess the takeaway, let me just make it very clear, keep things light. And I just want to reiterate that I do expect more downside here in the coming days to weeks. So the levels I'm watching right now, I'm zooming in tight. This is the ES S&P 500 E-mini futures. I've had these levels on this chart for a while. 28.63.73. We kissed it today. That could very well cap this bounce. If we go back to the recent videos, recent updates, even static charts on the front page, I had 28.30 as support, 28.63.75-ish, we'll call it. And so we kissed that support level twice yesterday. We bounced. We also held this uptrend line right here. We had a couple intra-candle pierces, but all the bodies are there. So this is kind of what we're between now. Here we just have a confluence of support and resistance coming together here. Things are really pinching right now. So if we can break that trend line, and then of course we still have to break yesterday's lows, I think we come on down and make a full tag of that 2793-ish target I had. Remember, we fell a little shy of that last week. So that would be the bearish scenario. Upside, if we pop that 2860, we'll call it 2864, and the downtrend line, because that comes in just above, then you're looking at 2892. And I know that's a lot of ifs. Again, leaning a little more upside. At least another tag of that trend line there would probably coincide with a backfill on the gap on QQQ I just showed you. And so let's look at the NQ futures. Oh, before I leave here, one thing that I'm factoring in here, whenever I catch a decent trend, whether it's a bullish or bearish trend, such as this is so far a pretty decent, this is by far the biggest correction all year, and we're certainly in a downtrend off the highs right now. What I like to see before positioning, completely closing my shorts and positioning in swing trades, right now I'm all over the place. I went home, reversed yesterday in the trading account long, but as far as my swing trading accounts, for me to reverse from the core short holdings to core long swing trades, I'd like to see, and it's not always 100% necessary, but I'd like to see divergent low. And so that would mean we take another thrust down, maybe all the way down here to 27.29, come in like that, and then end up putting in a positive divergence here. I did that all wrong here. Let me redraw that for you guys. Made a mess of that. So it would look something like this. And again, I like to see that on the 60-minute chart, either via the futures or SPY, QQQ, or both of those. All the better if you get both of them. So that's what that would look like. And again, this line could come all the way down here. We'll just have to take it as it comes. And then at that point, we might be able to reverse and put in some longs. And just an FYI side note, I poured through, I spent a couple hours last night just going through hundreds of stocks, and I'm looking at a sheet of paper now, my watch list. I have goodness, probably about 4 or 5 dozen potential setups, both longs and shorts. I'll need to cull through those, and I'll share some of my favorites in a video or get those on as official trade ideas. But when the market's like this, again, near term, very near term, I can see some more upside today. I can see downside if we break those levels, but I'm leaning towards a little upside. And as you could probably tell from the way I'm going back and forth here, I'm uncertain, so I'm keeping it light right now. And therefore, you're probably not going to see many official trade ideas. I'll point out a couple like Intel. Somebody asked in the trading room. That's one that I've been, highlighted last week with some bullish divergences, but I wanted to see a little more downside, and we're very close to that target. So I'll get to Intel in a second, and the semis as well. So there's the levels to watch. Wish I could give you guys a firm opinion on where we go today, but like I said, maybe a little more upside. And if it morphs into something else, we come on, blast right on through there, blast on through 28.92, something else could be in play. But as of now, let's just say this is my my uppermost bounce target, about 28.92 on SPY. Let's just leave it at that, or on ES, I should say. NQ, let me show you the levels there for you NQ traders. So here it is. We have quite a bit of overhead resistance, and so therefore we may not get a full backfill. Right now, 78.58. That was a previous price target support level, and we've bounced back to it. It could come into play as a resistance. This one's been chopped through quite a bit, that 75.43-ish level. It was a level before, and it did have some reactions along the way, but right now that's a pretty important level, fairly significant. And if we can pop that, I'll have to go to the QQQ chart, which I'll do here in a second, but we might run all the way up here to about that's probably about 76.50 or so, somewhere in there, to these reaction highs right here. That's the potential for the upside, and we'll look at QQQ in a second. Whether we do that or not, I'm still leaning towards another thrust down, maybe get that bullish divergence on the 60-minute chart. Maybe not. We'll see. Let's look at the 60-minute charts of QQQ and SPY, and then I'll share a few other things. SPY 60. Let's go to those purple levels. Okay, so remember my bounce targets. We already hit one, the uppermost bounce target in reverse, but there's that downtrend line I was talking about on the daily chart a second ago. You can see we've back tested that. So it gets sloppy here. Gets hard to really gauge the near-term direction, although again leaning for several reasons, things I see in the chart, everything else, how oversold we were. That's the other thing too, guys. Remember, when you get pretty stretched to the downside, a lot of stocks hitting support, and by the way, a big factor in last night's update, where I was leaning towards some upside, maybe backfill that gap on QQQ, is the fact our SOX short trade hit support. It hit my final target, and final targets are set at a level where I expect a significant reaction. That's why it's a final price target. I do think in the coming weeks and months there's more downside in the semis, but they got pretty stretched to the downside, so a bounce is certainly a possibility. I could probably add another downtrend line right here. I certainly could. I can see some reactions there. So here's a level that may come into play, and these previous bounce target zones, there's still resistance levels that might come into play as well. So let's keep an eye on that SPY. Let's look at QQQ for a second. You can also see the PPO turning back up here with the 9 EMA, the signal line still above the 0 line, so that's potentially bullish as well. QQQ, there's our official trade again. This was hit in the pre-market session. One benefit to trading futures, or to allowing your closing orders to be filled on in the pre-market and after-hours session. But there's the gap right there. You can see it clearly on the 60-minute chart. Here, let's flip over to this one. And that gap happened to be one of the previous bounce targets. I already covered that recently. So there's your first resistance level, and let's say my preferred bounce target right now. If we do any more than that, we may come up again, and I can see the possibility. I wish I had higher convictions of how far we go, but I could see a decent chance we come up and all the way back to that 185. What is it, 185.50 to 186 level again, and again as last week, hopefully ideally, I should say, for the bearish case, that should cap any advances. It did last time. It did on actually a couple different occasions. So it's a pretty decent range between here and here, but not, what is it in percentage terms? Let me measure it out for you. Probably not much more than 1.5%. That's what I figured. So and from where we're at now, maybe 2% upside. Okay, so remember, semis are, part of the tech sector, pretty key component, and they hit, the final target. You have the PPO curling up here. We were very oversold, and so they're bouncing. And I don't see a whole lot of resistance. Targets work in reverse. And remember that I also set my price targets on short trades. They're set a little bit above the actual support level. In this case, 188.60 is where that line is, and I had, that line had to be moved because we gapped down to hit that. That's right, we gapped down to hit the second target. We gapped beyond the previous target. It's not so much resistance anymore because we gapped down through it. I would tell you right now, and I mentioned the trading room, about 191-ish right there. That's where I think the semis might bounce to. They could certainly do more. Let me add that line for you, make it even 191 just to round it off. You can see quite a few reactions there and a gap to the left and some reactions there as well. I could certainly see a bounce all the way back up to the first target zone. Our first target, and that line was actually at 196.72. Here, I'll pop up, you can see it there, 196.72. So I had the target set a little bit above that level. So let me just make it pretty simple. That would be an ideal bounce target zone. Now, we've entered the gap here. We've entered the gap on QQQ. We've entered it on SOX. This is a gap. If we reverse and fail in the middle of that gap and take another sharp leg down, that's pretty bearish. It means the sellers are still lurking in the shadows. They outnumber the buyers right now, very near term, and you just have to be on your toes. So again, my preferred bounce target zone up here, this box, and something else happens, then and you're trading this long as an active trader, you might want to trail stops or just set your stops somewhere. It depends where you entered. I can't even advise that because it depends where. If you entered here yesterday, you reversed it, you're buying it here, you're buying it after this video, so that all depends where you're at. You'll have to pick your own stops there. Okay, Intel I mentioned last week along with Alphabet, both setting up with bullish divergences. But on Intel, I liked Alphabet of the two because Intel has a very solid support zone coming in. It starts at about 43 right here. Lots of reactions along that way, and a gap as well. So that support zone is defined by that gap back there. But the upper level, I put a higher weighting. I see a lot more reactions around 43. And, as I said, somebody asked about it in the trading room yesterday. I said, look, a lot of eyes are on there. If I plan to buy Intel and I'll pull back to 43, I don't wait to 43.00. I step in early. So, I took a position yesterday afternoon. And if it goes back down, and sometimes it'll hit that level. Usually one of two things going to happen. If you have such a well-defined level, a lot of people are watching, you're either going to, after a downtrend reverse, just shy of it, or you're going to cut through it to clear the stops, for those that go long on it, and suck in some more shorts, then reverse. That's usually what happens. It's just almost too easy to hit a level. It's not super well defined, but it's where it's where I have my line. So again, I think it's worth stepping in. And plus, Intel's deeply oversold. So the downside, from where it was yesterday to the bottom of that zone, about 4%. Upside, if we bounce, I'll have to really sharpen my pencil on targets. I'm just playing. I just actually played it through some very short term. Only have till Friday. Short term calls on that. Just a small position in an IRA, and I may take some shares on it in the trading account today. And I just want to play a pop and get out of that real quick. But there's reactions right there. It looks like some flagging action. It also looks like a failed bear flag. A lot of eyes were probably looking at this as a flagpole, bear flag consolidation. There's an impulsive breakdown. But again, I when stocks are this oversold coming up on support, I certainly wouldn't expect that to play out to the measured move of the bear flag pattern. And so if it's foiled, if we get above the where the flag was, that could spark a short covering rally and maybe take us back up here. We'll see. All right, so that's it. Oh, here's one of many trade ideas. Just want to get this one out. This is one I found last night. REMX is the Market Vectors Rare Earth Strategic Metals ETF. So it holds the rare earth stocks. You know, there's quite a few I have moving on my watch list today. A lot of these are small, very small. This is a penny stock, REEMF. You know, up another 20% or 18% today. They've been moving lately. You can see a lot of the names, and this is not all inclusive. I want to go every now and then. I have to go to REMX's website and get an update of their holdings. There might be some in here. This one's fallen to support, oversold, PPO's turning up, Trox. You know, when these things move, you're talking, you can see, you know, right here, 7% today. These things can really, really run. So that's just, I wanted to pass that along in case I don't get it out there before then. You see almost a divergent low, very close. We had a virtually almost equal low there with divergence, pretty big divergence on the RSI. So that's my thoughts. Getting back to the markets, keep it light because this thing literally, I think, can go either way today. They may sell into this rally. You know, again, we've entered the gap, but I don't think that the downside is over in the markets. And just so know, if you're a swing trader and you're just sitting tight, you know, like I said, all my core positions, that's what I'm doing. I think we come down here to at least that 176.74 in QQQ, and possibly more. And again, here I showed you on the 60-minute charts before. Let's just say we do it, get something like this soon. That would set the stage for a nice, long entry. Maybe cover the shorts. I'm not waffling on my expectation, or the being very open to the possibility we go down much more. We just may get a decent swing trade before we get there. We might not be in that, close to that waterfall type selling yet. I don't think we are. I think, like I said, anything's possible, but I'd love to see a little more downside, as I just showed you, to that target here, and that should roughly coincide. Where are we at on QQQ? Yeah, about that same level. I have it a little bit higher. We fell just shy of T3, and if you want to hold out for a little bit more, you might get closer, about 176.75. Call it 177, which would be a little bit below, obviously, that third target. But I'm just leaving this target alone for now, since it was never officially hit during the regular trading session. This is still an active open trade for now, until either that's hit or I'll leave the stop where it is now. We just didn't get close enough to that level. Oh, I almost forgot. Still, gold is still, shaping up for a nice, and it's on watch for an official trade. I'm going to pass this along right now. I posted it in the trading room earlier today. It's a potential day trade here. We have this is only a 15-minute chart, so not as important as the 60-minute or the daily, but you can see nice bullish divergences setting up here. We're falling down around to this previous reaction low right here. You can see all these reactions. So you have, I'll add a line for you right now. Again, this is a 15-minute chart of gold futures, but you can see here's where we've come down before, right about here. So you have 1, 2, now 3 levels. So you have gold A falling to support with a pretty hefty correction at that. So you're oversold near term. B, potential divergences. You can see some of the targets, all these lines that I've marked here. And I mentioned it yesterday too as a setup, but it never triggered. It needed to break above this 1279-ish level right there, this line right there. So it failed to do that. Took another thrust down, but it looks even better now because we have strong divergences on the, again, 15-minute chart, and we've fallen to support. And the other thing that helps support the case is, although we do not have that breakout in the euro US dollar yet, again, that would be, if and when that happens, that's what I'm looking for here, let me show you that. This is that big wedge right here, and I have two trend lines. I have the yellow trend line up above and the white trend line. It doesn't matter, they come in close together. So when they pop, and again, I have to see 113 go as well. That will help seal the deal because that was price support here. It's also resistance now, and that would give us a nice rally up in the euro US dollar, meaning a nice drop in the dollar. Here, I'll brighten this line up a little bit so you can see. And we have intersecting potential downtrend line resistance and that that target zone there. So if we get that move in the euro, it means the dollar would be falling and gold should rally. So we don't have that buy signal yet. That is what I call a pretty powerful buy signal for a swing trade and possible trend trade on gold, something you can hold on to for months, possibly more. Might be a bottoming play in gold. The other thing I wanted to show you was a 60-minute chart for more of a strategic trade. Or a tactical trade. That would be the strategic trade. You know, we get into gold and we have a position if I can confirm the analysis with the US dollar. But for right now, I showed you gold setting up on the 15-minute chart. This is a 60-minute chart of the euro US dollar right here. You can see this falling wedge, nice positive divergence. That's what I like to see. I look for these divergent lows. I have to go to the left of the chart here. We probably had one there. We had a divergent low right here. It doesn't take much, and we just need to pop above right here, above this wedge. And I tell you, I think it's imminent. I think it'll happen soon here. It looks pretty solid. We don't have the buy signals yet, so if you don't want to get in front of it, you know, you can take a position now. I'd keep it relatively small, maybe a starter position, a half position, add when it breaks out, and when gold starts to move up, or just hold off and wait for this thing to break out. And again, it's only a 60-minute chart, so it may only lead to a smaller rally. But if it does play out, you got to look at it this way. Here's a 60-minute chart. Take the widest part of the wedge. That gives you a measured target from wherever it breaks out. So let's say it does that. That's going to help firm up the daily chart as well. It would probably only about get us to the trend line, but it could be the catalyst. Sometimes those little 60-minute bullish setups can be the catalyst to break out a larger pattern on the daily chart. So again, I've been talking about it for a while. I'm on watch for potential breakout here and a buy signal on gold. And let's not forget the bigger picture on gold. You know, gold, as I said a minute ago, I might have said bottoming play. Gold already bottomed. Gold bottomed back in late 2015. And my bigger picture is this. We have a large symmetrical triangle pattern. It broke out recently. It's been back testing. So that's why I remain longer term bullish on gold. This is just, I think, a correction. We can't really call this, since the lows in late 2015, a new bull market or uptrend, because although we've been making a series of lower highs, which is one criteria for an uptrend, we don't have a series of higher highs. We have a series of lower highs. So we have more of a triangle type pattern there as well. So gold needs to hold this back test, go on breakout, and I would be very, very bullish, longer term bullish, if 130 gets taken out. To me, that's a very big level on GLD and would lead to a move all the way up here to about 151. Again, I've covered this many times in previous videos, but this is a weekly chart. You're just going to have patience and let this play out, and keep an eye on those shorter term charts, 15-minute, 60-minute daily charts, and for an entry on gold. Gold's also at that 120 support. I've talked about this many times, mentioned it, on the pullback as a level buying up. Now, if it breaks 120, if it's going to go down below 120, and really it's had a couple brief pops below, but snap back up there, I don't have any decent support down here at about 117.40. So if it breaks support and these near-term bullish scenarios, the divergences and all that don't play out, well, I'll just keep an eye on it and look to maybe look for an objective long entry down here. But if it can hold 120, we could go up, and the next leg up could pop us above the recent highs there. So there's GLD. And maybe a trade in palladium as well. This is the ETF PALL. Divergent low right here. You can see there. We had a divergent high here, so I was looking for correction on PAL, which came when we got the breakdown there, that trend line. And it fell to, the lower end of my target zone, support zone. And so PALL, again, palladium. And you can look at the futures there right now between that level. Where is it? Yeah, here's the futures chart. I've posted this a few times. We've had a couple trading ops here on the pullback here. So what it's doing, palladium futures are trading in this range between 1351.50 down to about 1304. There's our little trading range. Obviously a downside break would be bearish, a solid downside break, whereas an upside break would be bullish. So one to watch there as well. Okay, let's wrap it up here. We'll keep it right under the right on the 25-minute mark. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.